Welcome to the dark side.
All right, guys, next topic of discussion is using multiple time frames. When we look at lower time frames, other than just the daily chart, the less significant the signal, but the earlier sign of the signal, right? So if we're looking at a daily chart for a reversal, such as we want to see Bitcoin, a reversal or a breakdown of the 13, 9, and 20-day moving averages on the daily chart is going to be a much more significant move than us, say, looking at the 15-minute chart where it breaks down above and below these things multiple times every day. We want to be able to combine both the intraday chart as well as the daily chart together because one, basically what we're trying to do here is come up with a trading plan or theory based on a longer term time frame such as the daily, and then use the intraday charts such as the 15, 30-minute, 1 hour, and 4 hour to make sniper entries, right? Because we want to have pinpoint entries. And when you're looking at a daily candle, obviously at the start of the day, it can start up here, but at the end of the day, it can have massive moves up and down where, you know, if it just is a brand new candle, we have no idea what's going to happen that day, just looking at the daily chart, because each one of these candles has all this price action in it where it's just all over the fucking place intraday, which is why it's important that we understand how to implement an idea based on the daily chart for a bigger move that we're trying to go for, and then look at the intraday chart to try to better gauge the best entry going forward with that, right? So typically what I'm looking at when I'm trading is the 15-minute chart plus the daily, the 30-minute chart plus the daily, the 1 hour chart plus the daily, and the 4 hour chart plus the daily, right? And that just basically gives me different time frames for looking at different, you know, gauges of, okay, how significant of this is this move, right? A breakout on a 15-minute chart is not going to be nearly as significant as a breakout on a daily chart. Right? In addition, what we're going to try to also do is use the Iconic FX or Krypton Fear and Greed indicator. Basically just gives us an idea of when things are overbought and when things are oversold. Basically, this is massive greed up here where people are just buying in, things are going parabolic nonstop, people are getting greedy. And when things are in the greed area, there's probably a reversal coming. You just don't know when, like, right? We started going into the greed area when Bitcoin is at 49, but it stayed up there for a long time until it went all the way up as high as 66K and then as high as almost 70K, but did have a little bit of a dip below, but now down here, right? So it's definitely not perfect, but it gives you a sense of, okay, things are on a rip, on a tear, people are getting greedy and things just don't stop. And so typically what I try to do is not necessarily use this as a definitive guide to getting long or getting short, but it just gives me a general sense of, you know, where things are at in the market as far as sentiment. But if it is completely overbought, your short is probably going to perform better. Or if it's completely oversold, your buy and the dip is probably going to do better. Okay. And basically the goal that we're trying to do here is one, go back to just using our supply and demand zones and or whole number zones to get short. And then what I like to do is look at the intraday chart and try to pinpoint a sniper entry. What I said here is never short when the Iconic FX, or I just changed it to Krypton, Fear and Greed indicator is overbought on the 15 and 30-minute time frames, okay? So the key strategy here is to find a short setup on the daily chart for the idea, then wait for the Iconic FX, Krypton, updating as we go, Fear and Greed indicator to be overbought on the 1 hour, 30-minute, or 15-minute time frame for your entry point. You can also set alerts on TradingView for when price action gets overbought on intraday. So let's just take a look at an example of what that might look like. Say, even though I don't want to short Bitcoin right here, but say you wanted to short Bitcoin up here. Say if like right now, Bitcoin was down here, but we wanted to short Bitcoin if we got back up into, you know, the 9, 20, and 13 EMAs right here, okay? So daily chart, even though this is oversold on this area, we're now in that bearish trend, which we are wanting to, you know, draw this out, and we don't want to get long until these things break out above here. As long as we're in a descending wedge and below the 9, 13, and 20 EMAs, things are going to completely get annihilated until we break out above that, and retest of the 9, 13, and 20 EMA are areas to potentially get short before we see the next leg down. So typically what you would want to do here, say we are wanting to get short in this range, which is about right here, right? We wouldn't want to get short anytime we're down below here, right? Because what happens when price action is down here on an intraday chart, things spike back up quite largely. So when we're looking at an intraday shorter time frame, is this not an optimal area to get short? Because look what happened every time it was down in that range on the Iconic FX fear and greed indicator. When it was down here on the 30-minute chart, right? What happened? It spiked up. When it's down here again, it was oversold, spiked right back up. Down here again, what happened? Not a massive spike, but it then eventually rolled off the top and then spiked back up. So if we could just look at that daily chart and be like, okay, we're in this resistance zone. This is likely a higher probability area where things are going to roll off and go short. So rather than just like being like, you know what, fuck it, I'm just going to go short, we can look at the intraday chart and say, okay, I only want to get short once things get back into this overbought and people are being greedy territory, because this gives us a much better entry. Because if you get short down here and you're like, okay, things are breaking down here, and then all of a sudden things are spiking back up, at this point, you're thinking, fuck, we just broke out above those highs. We're maybe breaking out above this trend line here, and things might just reverse. And you might actually stop out here because you got short down here. Like, we don't want to do that. You don't want to be shorting on an intraday chart, 30, 15, or 1 hour, right? If we look at the 1 hour here, you can see it was down here, but we don't want to get short up here. I mean, we don't want to get short here. We don't want to get short here. We don't want to get short here. We want to get short when we're over the fear and greed indicator up here. Right. So 30 is probably one of the best indicators for this because it's going to be the most volatile and have the most signals for you. But you can see how difficult this would have been if you were short because things were all over the place. But you can see how much better your entry points would have been by waiting for price action to get over this price on the fear and greed indicator to wait for this zone. So say you don't want to wait for that to happen and sit there and on your computer for many hours waiting for that to happen. All you have to do is what I do is grab the horizontal ray tool and say price action was currently right here. And say you were like, I don't want to short the breakdown because we're oversold right here and we're in the fear index, which is typically an area where people might buy the dip. Now, I want to wait until we're back above this level because I do like the daily chart looking like we're going to potentially rip off this level. So what you can do is just get that horizontal ray tool, put it right above this level or even just below it so you have a little bit of forewarning. Now you have this indicator where if we like look back, now it's like, okay, right now price is here. I want to wait until this gets over that line and then I'll get an alert to my phone or on my computer. And then I can look at it and be like, okay, this is a much better sniper entry point to get short based on my theory of this is going to roll off this zone, but I'm going to wait for the intraday chart to get into a better position for me to get short. So as soon as that rolls over the IKNK FX fear indicator, right, you can click this and click this button here, which is add alert. And then you can say whatever you want, like time to prepare to short BTC. And so then whenever price gets over that and that line breaches, you're going to alert to your phone. You're going to get an alert that pops up on your screen. And then you're going to be like, okay, now we're in this zone where we're in this greedy territory where things are now overbought and more greedy on the intraday chart, but we're still looking good on the daily chart for my theory. And that would be a much better entry to get in when price is over that level on the 30-minute chart than to try to short a breakdown down here, which is you're playing with the risk of potentially getting in down here. And then you're all of a sudden getting squeezed on your short. And now rather than being like, oh, time to add, you're maybe even thinking about getting stopped out up here because you're at a massive loss now. Okay. So that's the general rule of thumb that I try to live by when I go short is identify the pattern that I'm looking for, whether I'm shorting off a resistance level or I'm waiting for the daily candle to get into a resistance level, you know, whether you're trying to short this breakdown up here, whatever it is, I identify the pattern on the daily chart. And then I use the intraday chart and I wait for it to be in a greedy and overbought territory between the 15, 30-minute, and 1 hour charts. So never short when the Krypton Fear and Greed indicator is oversold on the intraday chart, whether it be 15, 30-minute, you can even say 1 hour chart here also, right? Because you're just asking for trouble. Oversold is not a good time, not a good time to short, not a good time to short. Anytime it's down there on an intraday chart, it's likely going to see some sort of squeeze to the upside. So anyways, that's what I look at when I'm looking at the daily and intraday charts and looking for short positions.